Is Palantir about to double again in 2026, or are we looking at a 70% downside from here? Welcome to 2026. We are 1 week into the new year, and Palantir is arguably the most polarized battleground in the entire stock market right now. On one hand, the company has officially grown up. They aren't just a meme stock anymore. They are a consistently profitable AI powerhouse. But on the other hand, we have Wall Street models flashing red, implying the stock is so overpriced that a 70% crash isn't just possible. It's implied by the fundamentals. In the last 30 days alone, while the S&P 500 went up, Palantir stock actually fell by 3%. Why? Because the market is terrified that they are priced for perfection. Today, we are breaking down the leaked financial data from the last 30 days to answer one question. Is PLTR a trap at these levels, or the buying opportunity of the decade? Let's dive in. First, let's give credit where it's due. If you've been holding PLTR since the early days, you've seen a massive transformation. The narrative has shifted. According to the latest market analysis from this week, Palantir has successfully transitioned from a story stock to a fundamental AI leader. The doubters who said they were just a consulting company have gone quiet. They have secured a clear seat at the enterprise AI table. We aren't just talking about government contracts anymore. We are talking about a rapidly expanding commercial AI platform that is actually sticky. This credibility has driven what analysts are calling very strong operational momentum entering 2026. They've proven the business model works. But, and this is a huge but, success creates its own problems. And that brings us to the numbers that are scaring the smart money. Here is why the stock dropped 3% last month, even though the news was good. It's the expectations game. Consensus estimates right now are modeling Q4 earnings per share growth of over 60% year over year. For the full year of 2026, they expect EPS growth near 80%. That sounds amazing, right? But here's the problem. The stock is trading at a forward price-to-earnings multiple of over 170. Even for a high-growth tech stock, that is nosebleed territory. But the number you really need to look at is the PEG ratio. The average software sector PEG is around 1.6. Palantir, their PEG is over 3. This means you are paying double the price for growth compared to Palantir's peers. The report explicitly warns of valuation compression risk. Basically, if Palantir misses earnings by even a penny, or if their growth guidance slows down just a tiny bit, the multiple could collapse. This is why some analyst models are implying up to 70% downside. It's not that the company is bad, it's that the stock price might be completely detached from reality. We are seeing a rotation in the market where investors are moving money out of these high multiple stocks and into safer value plays. So what happens next? If you are holding or thinking of buying, what are the triggers for 2026? According to the latest data, there are 3 specific risks you need to watch. The report highlights execution risk in the commercial segment. Everyone knows Palantir owns the government space. But to justify a 170 PE ratio, they must win against the hyperscalers in the commercial AI space. If they lose pricing power or win rates drop, the stock tanks. Sentiment right now is described as balanced to cautious. The market is nervous. Any shift in analyst ratings could trigger sharp, volatile moves. We are seeing highly divergent views. Some say double, some say crash. This divergence usually leads to massive volatility. If interest rates tick up or the market goes risk-off, long-duration assets like PLTR get hit the hardest. So, what is the final verdict for January 2026? The financial tracker categorizes the impact of these narratives as high. Here is how you should play this, depending on what kind of investor you are. If you are a growth investor, Palantir fits as a high-beta AI core holding. The operational momentum is real, but you need to size your position carefully because the volatility will be insane. You are betting that they can beat that 80% earnings growth target. If you are a value or risk-averse investor, the data says stay away. The valuation is extremely hard to justify versus other profitable software names. The recommendation here is to wait for a material pullback before entering. My take: Palantir has won the war for legitimacy. They are a real, profitable AI player. But in the short term, the stock price has gotten ahead of itself. The next earnings call is going to be do or die. I want to know your price target for the end of 2026. Are we seeing $200? Or are we crashing back down? Comment bull or bear down below and let me know why. Don't forget to like and subscribe for the next update. I'll see you in the next one.